Good morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Thursday morning pre-market webcast. Okay, we're trading 1909, daily chart at the ES, so basically flat line from yesterday. Let's just very quickly talk about where we are and then where we're headed. We've been on a 4-day Bollinger Band ride. Yesterday's highs are 1914. Yesterday's low was 1904.5, and that's important because here's the task that's laid out for both camps this morning. The bulls must defend 1904.5 at all costs. They can't let that number break. They can't allow a 1904 quarter print. At the same time, they need to continue to push back up to the upper band and make new highs. If they do that, then this upper band ride will continue, at least on the chart, into tomorrow. What the bears want to do is to seal 1914 as the highs, to push back below 1904.5 and make a new low versus yesterday's low. Because until that happens, and a nice similarity to this is what we've seen in oil, and I can flash that chart up for you in a minute. To break yesterday's low begins the process of rolling over the daily chart for a retest of either the 9-day moving average here, the blue line, or potentially a move back to the middle Bollinger Band, which is currently 85 quarter. It would probably be not substantially higher than that, but definitely higher than 95 quarter by the time it gets there, probably closer to round number 1900. And we can see how this plays out in oil. Okay, here's the oil daily chart, and there we had a Bollinger Band ride of 4 days. We took out the prior day low on this day. Then the larger move was the day following, and we're slowly headed back to the middle band. So keep that dynamic in mind as we trade the E-mini, because it's very similar. And when these things correct, they can move farther than you think. So right now, with respect to the mini, we aren't even at step 1 yet. We have not broken the prior day low. But if we do, then you look a couple days out for a potential move lower to test. All the bulls need to do to keep this going is to hold 1904.5 and go make new highs. As long as those morning dips get bought and they take them up and they make new highs with them, the bulls are going to keep doing what they're doing. And if you're a day trader and you're a long bias trader, the easiest thing to do right now is exactly what happened yesterday. We'll have that dip every day. Come on in and grab it. Use a reasonable stop in case you're wrong, because one day you will be wrong and this will reverse itself. But until then, you can hold that, up into the close, and we grinded higher all afternoon yesterday. Okay, that's all I got. Follow us on Twitter at Princeton Trader. Check us out on the web. Check out the website. Check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.